Welcome to the Skeptics Guide to Investing with Steve Davenport and Clem Miller. Every 2 weeks, Steve and Clem bring you brief investment insights you may not find anywhere else. We hope you enjoy today's episode. Here are Steve and Clem.
Welcome, everyone, to Skeptics Guide to Investing. Today, we thought we would take a mid-year break and just kind of start to think about, okay, we've had the first half of 2024. What do we see as the issues and the current issues that will proceed into the second half of 24 and could be more or less important? And then at the end, we'll ask, what issue is the media not talking about that maybe it should be as we look ahead to the second half of 2024? So if I look at the first half, it was dominated by two letters, AI. It was AI, and then it was a little bit of dessert with AI on the side. It seemed like the media couldn't figure out that there was anything else going on in the world than the purchase of high-speed chips from NVIDIA, and the media helped NVIDIA towards I think it's 175% rise since the beginning of the year. And it's really just been a crazy ride, I would say. I understand that it's a new area and I understand there's new prospects. But I guess, Clem, I'd ask you, is there any way that this continues to dominate the second half of 24 the way AI has dominated the first half?
I certainly think so. I think there's
175% more for NVIDIA.
Well, I didn't say that.
Well,
I don't think there's going to be a reversal. I mean, when I take a look at NVIDIA's short interest ratio, it's about 1.4%. That is short interest as a percentage of float, which is, not something you would associate with a company that's going to have a giant protracted pullback. It had some bit of a pullback in the last week, but 1.4% short interest ratio is not something you would see with a company that's going to see a huge reversal. I think in the.
Can I just stop you there for a minute, Clem?
Yeah.
What number, if it started to creep up and it got to 2, then it got to 2.5, like, is there a number in your analysis that says, once you get over here, you're starting to be something that I need to worry about?
2.5.
2.5?
Yeah. And you know what? That I don't want anybody to think that that's like a terrible number. That's actually a pretty decent number. It's just that I'm being pretty conservative. Now I will do higher than 2.5, but it's got to have other elements that look good too. Bad. I would say that truly worrisome is above 5, and devastatingly worrisome is above like meme stock type worrisome is like 8 to 10%. If that puts a
no, that's very helpful.
Yeah. So yeah, I mean, NVIDIA, I just don't see that having a giant pullback. I think part of what we need to think about when we talk about AI is I think there's 3 types of companies in this space. One type are the companies that have kind of a monopoly position. NVIDIA still does. And then when you talk about, NVIDIA is basically a design company. You talk about the companies that, that makes its chips, which is TSMC in Taiwan, which obviously has its own geopolitical issues. ASML, which makes the laser lithography equipment in the Netherlands. I think those are very solid companies, monopolies. I think you've got the AI type. I'm talking about companies that are integrating AI into their systems. And, so those would be the typical, Google, Microsoft, now Apple is starting to go down that road. So I think those companies are, very strong companies, monopolies in their areas. Those are developing AI. I don't think we have to worry about those. Where I would be skeptical is, anything that purports to be AI oriented. You hear this talk about picks and shovels and all that kind of stuff. Anything that purports to be AI oriented, I think you got to be very careful about. So, for example, I'll give you one theme that I see out there. You've got obviously data centers are important for AI, no question about that. But people are talking a lot about providing power to the data centers as sort of indirect way of being able to play AI space. And, the question is that one step removed, two steps removed? Is that really an AI play? I can't really say that it is. And, it's almost like
Well, it's got
AI.
a beta of what point? I mean, utilities returns versus AI returns. I mean,
Yeah.
what are you going to pick up? The utility is going to go from a 3.5% to a 4.5%.
Yeah. I mean, I'll tell you, there's one name that I held for a long time, and then its short interest ratio just went out, just went much higher than what I'm comfortable with. And that's Vistra. So I would, if you want to take a look at that, take a look at it. It had sort of geometric returns for a while, and then it started to get a little unstable, and so that's when I sold to sort of lock in those cumulative returns. I probably gave up some more upside, but that's when I sold. So I just think one has to be careful about these ancillary industries or ancillary type companies, and not put too much emphasis on on those relative to those companies that have established monopoly
Don't you think that
positions.
some people are trying to find stuff that doesn't have the downside volatility but has some potential extra growth from AI related activities? So they want to own NVIDIA, but they just can't stomach the ratios, right? And if they can't, then they say, okay, let me look at, energy companies or other companies that are going to be a secondary beneficiary, because I can take that they have all these assets in their balance sheets and their multiples are much lower. So this allows me to say I'm in the AI space, but I'm really not in a space that has a, like you said, more of a geometric versus.
Some of these utilities, I'm talking about, kind of bigger utilities, not ones that people haven't heard about. They have a lot of other business besides AI. That's sort of an incremental business, and that's what leads to their lower earnings growth, lower revenue growth, lower profitability, and of course lower valuations because of all of that. So, I mean, I don't look at valuations by themselves. I look at the whole picture, and that's why I don't really see I don't see utilities in general as being all that attractive. I see this, I see why people are kind of attracted to the idea of being invested in those utilities that are pursuing relationships with data centers, but I wouldn't count on that being a real way of getting into AI space and profiting from it.
I agree. I think people are, and I don't mean to put any shade on anyone who's out there trying to report in the financial markets, but it feels to me a little bit like this first half, we lack stories. And when there's a lack of story, there's a lack of things to talk about. There's a lack of things for people to, get interested, investors to really follow them online. So in my mind, and Clem, you can tell me if I'm being too skeptical here. I feel like AI was a great story that everybody just keep playing, and it has real legs and it has real reasons to succeed. But to dominate 80% of the news coverage in the financial space for this first half of the year, I think is just ridiculous. And I think that we focused on it and we focused on it and we focused on it some more. And it feels to me as much like there's a lack of other stories. And what I see happening is the second half of the year, there's going to be this big story in November. And you're going to see the coverage and the interest in AI kind of dwindle because one, you've had already 175% move in NVIDIA, and a lot of these names have had tremendous runs, and they're not going to give it all back, but they are going to not be the center of attention. And if you're not the center of attention, there's less volume. There's less volume. There's probably less upside. I mean, is it possible that we jump from story to story, and the relevance of the story isn't always the relevance to the economics or the earnings?
Absolutely. I think that's part of the problem of relying on, CNBC and the media, because they do jump from story to story and they get people excited or they get people worried. A lot of people were worried. If you look at the news the last few days, a lot of folks were really, really worried about NVIDIA, and they brought up stories from the past about Cisco and so on and so forth. And I bet you a lot of people sold at the recent bottom for NVIDIA when the smartest thing to do would have been to stay in. So
No, I thought there was going to be a boost after it split.
yeah,
And there was.
yeah,
There was a nice kick. And now we're back to kind of the split level.
yeah.
So I think the people who came in for that split and they may have gotten out at, during this time, or they just got in at the split level. And I think now they're in a position where they have to think about it because they're going to say, okay, I didn't take advantage of that short-term bump. Am I really a long-term investor? And
Sure.
I guess, I think that's something that everyone has to ask when they start to get a position that's challenged, right? Is, do I really believe long-term that at the price I purchased, this is something that I want to own?
Yeah.
And I believe for NVIDIA, because their earnings are following right up and the revenues are looking great, that yes, I think there is reason to still own it and have a large position in it because it is the representation of the space. But I guess the original question was, is AI going to dominate second half of 24? And my comment would be, I don't think it could possibly dominate the way it did. So
Yeah.
I think AI takes a step back from being 70% of the news coverage to being 20 to 30.
Really that low? Yeah. No, I get this, the argument you're making that the news drives volume drives prices, and as a result, share prices might fall back for AI stocks.
Yeah, I'm not talking catastrophic. I'm not saying anything's
Yeah.
underlyingly changed. I'm just saying that I believe we run over some average return line that's a quadratic equation,
Yeah.
and it looks and feels like, hey, this average return over time, but we go through periods where the average return is going to be negative because it gets overpriced, and we go
Yeah.
periods where it's going to be very positive because it's underpriced. And I
Hopefully,
think that right
Steve.
now, AI is
Hopefully, Steve.
overpriced.
Hopefully, we still have an audience after you use the term quadratic equation.
I don't know. I was going to talk about the variables, and then I started. Probably had too much coffee this morning, Steve.
um,
So
yeah, the question then becomes like, if you decide if you decide to maybe pull a little bit out of NVIDIA, and some of the other Magnificent Seven companies, the question is, where do you put that? Do you put it in cash? Do you spread it around other stocks? I mean, what do you do with it?
Yeah, I mean, we just had this discussion with my partner, and we've had AI, we've had NVIDIA, and it's done very well. And the question is, do we want to, we're going to rebalance. This rebalancer is going to take a little bit off. Not going to take a lot off, but it's going to take some off because the performance has been extraordinary. And the question is, do we think this time is different? And we want to have it rebalance less of the NVIDIA and keep more of the NVIDIA in a position that's above average. And it's a tough question because it is truly a unique stock. And there have been unique stocks before, like Cisco and like others. And so the decision we're kind of coming up with is to let the discipline of a rebalancing do
Yeah.
its work. And it'll find the other names that we think are, going to be good prospects. We don't own things that we think have bad prospects. So yeah, I think it will find space in the portfolio where there are better opportunities. I mean, it's not clear to me that the rest of the economy is not also doing well and also has opportunities. And so if we're, if the target price for NVIDIA is 130 or 110, tells you how much you should be in it or out of it, based on what, you feel is going to happen.
Yeah.
And there are some stocks that are selling at 60, 70% of their target. So I believe that there are things that can succeed in this environment. So I think you got to give them a chance, and it's not an all or nothing.
Yeah.
Okay. And the second thing for second half I'm looking at is, what do we think of the fervor, the energy, the interest in obesity drugs? We talked about them on a podcast a while ago. Do we think that that is a continuing story that's going to dominate the second half of 24? Is this story starting to drop away? Is it not important anymore? How are you feeling about the obesity drug, Lilly Novo kind of question?
We'll be right back.
We hope you're enjoying our episodes. If you are, then we'd greatly appreciate your liking, following, and sharing. Help us help others. Now let's get back to the discussion.
I think it continues to be a big deal. I think if you look at the short interest ratios for Lilly and Novo Nordisk, they're both quite low, so that's good. Their valuations are not unattractive. I think that the expected growth for both is pretty strong. And again, when I use those terms, I'm using them in a relative fashion, relative to other stocks you might look at. So, I think this is you can call it a theme. It is a theme, right? And I think these two companies will continue to dominate that area. Sure, there are others that are trying to get into it, but I think those two are established. And I think that, given the way the world eats, right? I think
Or overeats, depending on how you look at it.
overeats. Okay. I think they will continue to have a role in our, extended healthcare system. I really do.
No, I agree. I think that the world isn't solving their problem with weight. It's kind of putting a Band-Aid on it. And some of it will lead to better results for people who can take that advantage of the drug gives them to get to a certain weight and then run with it, literally, or walk at least 30 minutes a day with it. But I kind of look at it as it's going to expand because I think that the secondary players are going to start to become bigger players. And so as much as it's been a Novo and Lilly story, I think it's going to start to, expand out into Amgen and Pfizer and some others. Just like you say that some of the AI stocks have all, claimed some orientation or association with AI. I think everybody's going to want to talk about addressing the obesity issue around the world. And I think it's going to be a story. I just think the story is going to be more about a broadening than it is about just those two, because I think they've had their time in the light. And I think like everything else, every dog has his day. It's gonna widen out because I think it's more than just those two. And I think the problem is much longer and much deeper. And I think there'll be all kinds of, how do we combine the drug with something else in terms of counseling to come up with a holistic solution? Because I think that just the drug is not a solution. The drug is one step and one piece of the process.
Yeah, absolutely. And I do think that, if you think about a portfolio approach, it's really good to have both the obesity drugs and AI in the same portfolio, because it removes, there's some offsets in terms of the risks involved, right? The risks to the obesity drugs are different than the risks to the AI stocks.
Sure. I think it's a good theme. I think we talked about it. I think I feel better for understanding a little more about what it's doing with the peptides. And I think it's a very exciting space, but I just say that is the second half going to be as dominant as the first half? My answer would probably be no. And I think we will at the end of this hopefully agree that, this election and the elections around the world are going to dominate the second half in terms of information flow and therefore perhaps some equity dollar flow. So the next item, we've talked about in the first half, which has been Europe and the impact of the Ukraine and the efforts there and how it affects their energy sources and how it affects everything in the European space, especially the political. How do we think, Europe and the elections and the Ukraine as an issue is going to dominate the second half versus the first half? Is it going to get more pronounced? It sounds like some of these battles are getting more serious, and there is definitely a feeling that this, people could be trying to set up their lines for ultimately a ceasefire and some type of a negotiation.
So I think, it's hard to have a crystal ball about what's going on with Ukraine and Russia. You had a long period of time starting last year where Ukraine, after some advances, has basically been stuck. And then more recently, Russia has made some advances and, Ukraine has pulled back some, but that was before they got some of the more sophisticated US and other equipment to be able to be used. Now that's the ground war. There's a very sophisticated air campaign that Ukraine is waging, as is Russia, against the other side. I mean, you got Russia, trying to destroy the energy infrastructure of Ukraine. You've got Ukraine trying to destroy military targets within Russia, and having some spectacular success in destroying Russian ships on the Black Sea, Russian facilities in Crimea, and so forth. So, you've got a lot of military successes and failures on both sides. I think that I think that eventually, my prediction is that eventually you're going to see more Western military advisors on the ground in Ukraine. I think it could be, by advisors, I mean, sort of contractors. And, if you think about it, contractors were used to a degree in Iraq. They were used to a degree in Vietnam. I don't think we're going to see actual military on the ground, U.S. military and European military on the ground in Ukraine, but I do think we will see some contractors there to maintain and help out with some of the equipment there. They're going to maintain it. They're not necessarily going to pull the trigger. That.
Is there more of a commitment in terms of money and resources, but not necessarily a commitment in terms of news and information flow?
You mean disinformation?
Yeah, I guess I'm saying is that some people would look at that as a distinction without a difference. If you're putting more people in danger, it's a more dangerous situation. And if we're going to say that things in the Ukraine are going to get more involved, less involved, or stay about the same, I guess we're saying that we think there's going to be more involvement in the Ukraine.
That's what I think. I think there's going to. I think there's. Yeah.
Then we look at Gaza, and I can't really figure out where the story of Netanyahu begins and ends, and where the story of this Gaza event come together. Right? I saw recently that some parts of the Israeli government are asking that these ultra-conservative groups be drafted that have religious reasons for not fighting, because it's getting more and more clear that this group, by supporting Netanyahu and saying all these things about being aggressive in Gaza, but then not providing any troops from their population, is really in a position where that's starting to upset the rest of the government and starting to make Netanyahu less stable in his current position. And if he becomes less stable, does he become more aggressive? So will Gaza get to be a bigger story in the second half, the same, or it will decline because it will start to drift away as we focus on other things?
I think Gaza will be a less important story going forward, but it's going to be less important because Hezbollah in Lebanon is going to be more important. I think that it's fair to say that in the Gaza conflict, you can't measure success by the number of people you've killed, whether it be civilians or soldiers or terrorists on the ground. I think success is whether you've achieved your objectives, and getting rid of Hamas and bringing the hostages back into Israel were the noble objectives of Netanyahu, and he's failed in both. And he failed also in keeping.
I think setting a goal of elimination of a group.
Yeah, it's an idea too.
Israel is completely off the rails in terms of how does a country that's based on the idea that they want, they were mistreated in World War II. They've been mistreated through history. And we're going to say that now that you have arrived and you are going to say, we're going to eliminate this other group. It's really a very difficult kind of goal to achieve, not just because it's, 100%. We're going to eliminate 100% of Hamas's presence in Gaza. I mean, it's not reasonable. It's not acceptable as a way to when you say about success in war, it's kind of, that brings up a topic that I think we could probably spend a couple of hours on, right?
Yeah, I mean, I used to think that there was a solution to the Gaza situation, which was to use a tactic that situation that negotiated end to the Israeli Lebanon PLO conflict back in the 80s, where Israel or the PLO agreed to be shipped out to Tunisia and operate in Tunisia, well far away from from Israel. I used to think, wow, you could apply that in Gaza and have Israel and Hamas agree to the Hamas leadership and fighters being shipped to, I don't know, some other place, right? I used to think that, but Hamas dug itself in, and its leadership has no intention of leaving. I think that's because they're more extremist in their religious views than the PLO ever was, and certainly more than what today's Palestinian Authority is. So it's kind of
Doesn't it come
unfortunate.
down to money?
What?
Iran is supporting them in such a way that the PLO is never supported.
Yeah, that's true. I mean, the PLO.
I hate to break things down to money.
Yeah.
That seems like a gross mischaracterization, but I look at things and I say, Iran keeps, and wants this effort to continue, Israel can try as they might. There's just too many areas and the borders and too many things that they can do in terms of getting other groups involved.
From a strategic perspective, both from the Iranian standpoint and the Israeli standpoint, Hezbollah is much more important than Hamas is, like much more. They've got much more sophisticated weaponry. They've got more weaponry.
Yeah.
If that already they're in a conflict, kind of a low level conflict. If that thing gets worse, which I actually think there's a pretty high probability of that getting worse.
Right. I mean, let me sum up. If I think Gaza has an issue in itself, maybe the same or less in the second half, but the overall area of the Middle East could become more of an issue in the second half.
Yes.
Is that a fair conclusion?
Yes.
Okay. So now we're going to take a ride over onto the other side of the world. And what do we think about Asia and what's happening with the US kind of getting together with Japan and Australia, and China continuing to threaten, and China continuing to deal with its own economic issues in terms of real estate? Are the issues in Asia going to be the same, greater, or less than they were in the first half as the US gets derailed or maybe clarifies its positions with the election and the other things going on in the US? How does China and Taiwan factor into your portfolio going forward in the second half?
So I do not own, I mean, if this is any indicator, I do not own Taiwan Semiconductor in my portfolio. So, I see, not that it's not a great company. It's a great company. It's got a monopoly.
No, but I guess I'm saying that's where you were today. Yeah. In the future, do you see yourself turning that around and saying, I think this thing with China is dissipated and I think it's time for me to own Taiwan again?
No, I think the China US conflict is one that is going to get incrementally worse from year to year to year. Okay. I don't think there's anything magical about the second half of 2024. But
the way I look at it, Clem, is that we are, as a country, and we politically, and you can call me, cynical if you like, but I believe we have an attention span of slightly more than a gnat. So in the second half, if everything starts about Trump, Biden, Trump, Biden, I think our attention span dissipates, and our ability to handle what's happening in some of these areas creates an opportunity for China to do something, because we're not looking, our eyes aren't on the ball.
Yeah.
I would say our eyes aren't on the ball most of the time.
Yeah.
That if anything distracts us, it's going to create an opportunity for China.
Right.
Is that too cynical for you?
Well, I will say this, that, yeah, I mean, there's going to be a lot of focus domestically in the US in the second half. But what I think is fair to say is that there's bipartisan consensus on very little in the United States, but there is bipartisan consensus on China. That China is a threat, that it's a potential long-term strategic adversary of the U.S. I think there's a lot of support.
I'm not talking about just eliminating the production of some chips here. I'm saying, don't you think that China could be emboldened to say, their eyes, other places, now's our time, and we blockade Taiwan, and the U.S. is deeply engaged in Gaza and the Middle East, deeply engaged in the Ukraine, and we're not able to pivot in the middle of an election cycle, and China is given a free ride for, say, 6 months. That's my, if I was asked what thing people aren't talking about that could happen, that's kind of my second half, ultimate off the rails type of prediction.
I don't think that's going to happen, but I agree that it's kind of a gray swan, black swan kind of situation, that we can put that in the category of things to worry about, or things that may happen that people aren't focusing on enough. I think we can put it in that category. But I think it's, I mean, clearly, I mean, from a global economic perspective, the China, Taiwan, broader East Asia political situation is, I think, just as important, if not more important, than what's going on in the Middle East from a global economic perspective.
Well, I do too. That's why I think it's kind of interesting that we hardly ever hear of it.
Yeah, well, it's one reason we don't hear about it is because it's complicated. Okay, and it's people.
Are you saying
it's hard for the media to get their arms
down
around
to things that are only simple?
Look, it's
that's insulting.
That's one of the reasons why the media focuses a lot on the Middle East, because especially the social media, because it's easy to paint one side or the other as bad or good or whatnot, right? And it's, when in reality there's shades of gray, but it's easier in that situation to be starkly black or white, when only some of us realize that there are lots of shades of gray once you get into the details. In Asia, it becomes much more complicated, because there's all these different interests at stake. Japan, China, Taiwan, North and South Korea, even Vietnam and the Philippines. It's complicated, and I think we as in the U.S. are actually taking preparations for potential conflict. I saw just yesterday an article that suggested that that the U.S. was rebuilding airstrips on small Pacific islands that had been abandoned after World War II, and I thought that was pretty significant. That we would be building those. Those are just in case Okinawa, the U.S. bases in Okinawa and Guam are attacked, I suppose. We've strengthened the relationship with the Philippines.
Places to put yourself down.
Yeah. So I just think I think that it's a longer run thing, but I think that is a very significant risk of there's a very significant risk of conflict between China and the United States over the next 3, 4, 5 years. I don't think it'll happen.
Okay.
I don't think it'll
So,
happen.
so if we summarize Asia, we'd say still an important area, but in the next 6 months, we anticipate the back and forth to ultimately keep it about the same. Is that your?
Yeah, I mean, there could be, probing here and there. But I think that's about right.
Okay. Now we're going to get to one of my favorite topics, and one of yours too, Fed rate cuts.
Yeah.
So if we look at Fed rate cuts, we've been talking about raising rates. We've been talking about lowering rates for 3 or 4 years now. And all of the talk and chatter, as we talked about in one of our podcasts, really amounts to mostly hot air, because it ultimately, the market reacts the way the market reacts based on what they see as the true level of rates. And sometimes the Fed will adjust to the market, and sometimes the market will adjust to the Fed, but they are somewhat related to each other, but not necessarily causated. And when we think about rate cuts, I see Bloomberg today with an article that says, hey, we might not have rate cuts in September because it might be influenced by not wanting to appear engaged in the election and trying to pick a winner, which I think we did a podcast on about 6 months ago. So I find it amazing that the mainstream media could come out with something so expected, so unbelievably kind of obvious, but they haven't talked about it. They've been talking about this reason for this rate cut and this reason for this rate cut, and trying to get to 2 by the end of the year, and all these imaginary gremlins that are running around. And in my mind, we're done. We're not going to cut rates in the September, October, November timeframe, because it would be so blatantly a move to help one side versus the other that I think it's beyond being political. It's basically saying we want to determine the result. And I look at this and say, rate cuts are done. I mean, if Biden wins, and if they, do a rate cut in December as a last-ditch effort to show people that they are supportive of the U.S. economy during this time, I think it really isn't what the market is expecting. And I'm kind of amazed that the market is just now saying, I wonder about the election and whether that will influence anything. So in your mind, is the next 6 months going to be more about rate cuts, the same gobbledygook, or is it going to dissipate a little bit and give us a break?
I don't think there are going to be rate cuts because of the political environment. I think you're right that not doing rate cuts is just of a political influence as doing rate cuts, right? The lack of action is also has an impact. Right. It has as much of an impact as taking an action.
Well, I mean, let's go back. When Powell was reappointed, he was delaying increasing rates, which was good for the new president. And guess what? The new president decided to reappoint him for a new term.
Yeah.
And the next meeting after that, they began to raise rates.
Yep.
Can we honestly say that this was completely based on the economic data and not the fact that he wanted to be reappointed and he was going to do something to help the new government, so that he endeared himself to them, and then he delayed doing something that was going to, I mean, this goes back and forth for decades, right, Clem?
Yeah. I mean, the Federal Reserve is a part of the government. I know people say, conspiracy theorists and others say, oh, it's really controlled by the banks and not by the government. And sure, there are banks that are represented on the regional, the regional banks and so on. But it's really a government agency. And as a government agency, the the Federal Reserve chairman's appointed from the top, and just like any other, Senate confirmation and so on. And I think that they've tried to diminish political influence, at least on the surface, by having longer terms and whatnot. But it's still a political agency, and decisions, I think, are influenced by politics. And I think to sort of suggest otherwise or to ignore politics is just a little bit on the ignorant side. I think yeah. I mean, I think it's something like 75% economics and 25% politics.
Yeah, I think it depends on how close you are to an election. So
Yeah.
I would say in the general year, non-election year, it's maybe 75-25, but I'd say it gets close to 50-50 when you're in a presidential election year.
Yeah, I think now with a short period of time left, I think it's 50-50, and another month or two it'll be 75-25, and I don't think there will be any action. It's politically safer to take no action than it is to take some action.
Yeah, and sometimes the numbers, if you did something opposite of what the numbers are telling you, I mean, and you have the minutes from all the other meetings, it just would look and feel, completely out of character.
Yeah.
So the last topic about what's going to dominate the second half is probably the one that we could have spent all of our time on, which is the election. And I guess I'd ask, when we think about Trump and Biden, we know early now what's going on. I looked at the VIX, and the VIX doesn't seem to be indicating much. There is an indication that a lot of people like Goldman and others are talking about the fact that the election won't be decided at least for 15 days. So if you're going to get protection, you get protection into December. So I think that that could be a good call, that there will be more uncertainty than people are used to, because the one thing everybody thinks is, one side will win or one side will lose. But what if there's just a repeat of the Gore-Bush, and there is a lot of uncertainty, and I think there's going to be a lot of those people who are going to be extremely upset at the way the Supreme Court is going to have more power. And I don't know if in certain cases we won't let it go to the courts because they'll feel that they're not going to get treated fairly. And to me, this is an election that has no winners. Either side would tell you, I'm not happy about this with my candidate, I'm not happy about that with my candidate. And I guess I'd say 70% of the electorate, maybe 40% on the Democratic side, and 30% of the population that's hardcore Republican, are not going to change what they're voting or how they think about it. They're going to go with what they feel is obvious and that their party has the right answer. But it usually comes down to that messy middle. And that 30% in the middle, it's independent, undecided, or however you want to characterize them, that jumps on either side of an issue based on what's important to them, whether it's social, whether it's economic, or whether it's something to do with the character of the person running. I mean, we've got two characters running, and there is a lot of character we could talk about, and we're going to see Thursday at the debate. I guess I'd ask, if you thought about this in terms of what's going to affect my portfolio the most from the election, do you think the election's impact on my portfolio will be greater than I anticipate, the same, a normal amount, or somewhat less than normal? Because there's so much that they both are fighting each other that there's ultimately not that much of a clear advantage to one or the other for them to impact the economic and ultimately the earnings of the companies we own. Where do you see this election in terms of impacting your portfolio, Clem?
I think that both candidates are going to be bad for business in the United States.
Really?
Yep.
All business?
Well,
I mean,
uh, not
that was my
necessarily.
next question, just so that you realize, is which industries and sectors are
Well,
going to
let
be
me
the
let me
ones that benefit
explain
from
why.
their
Let me
win?
explain why I'm saying what I'm saying. Okay, so let me just say first before I go into that I think it's still early, really too early to make any kind of guesses about where this whole thing is going to end up. There's a lot of variables involved, and polls at this point in time are not to be believed. And if you think back to 2016, nobody expected Trump to win, and that same year, nobody expected Brexit to pass, and in the UK. And so, I think it's impossible to know what's going on until it happens. Secondly, I would agree with you that we may not know what happens with the results until they get litigated for a few weeks after the elections, because I do think it'll be close in a number of states. So I think I agree with you on that point. Now, the reason why I think both candidates are bad is on the Biden side. I think even though I think we have to give Biden a lot of credit for some of the policies he's had in terms of sort of Keynesian policies of pumping some money into infrastructure projects and renewables and so on. I give him credit for doing that. On the other hand, I think that it's likely that we'll see some tax increases, and I think that there's going to be, I think there would be a rollback of some of the Trump tax decreases that you saw back in, I believe, 2017. So I think he's bad for business from a tax perspective, Biden. But from a Trump, in terms of Trump, he's not good for business either. In fact, he could be far worse for business than Biden is, because at least Biden is predictable. I think with Trump, um, what could happen is that. Hold on, I just had it. Okay, I think what happens with Trump is that he is going to have giant tariff increases. He's already talked about giant tariff increases. He's going to be much more problematic as far as politics is concerned, as far as international politics is concerned. He's going to he's just going to create a lot of chaos. When he actually had a meeting with the Conference Board of Business Leaders a week or two ago, and a lot of those business leaders came out of that meeting saying that it would be chaos if Trump won. And they were even talking about, how while they don't really support Biden, they think that Trump would be far worse for business. So I think, I think there's no clear candidate who would be positive for business. Unlike, in past elections, prior to 2016, I think that there were a number of elections where business could look at the candidates and say, well, this one might be slightly better than another one for business, but neither of them would be terrible. And I think in this election, it's just different. Now, I think some of that's already priced in, obviously, because those are the two candidates. But I think it could get, as the election approaches, as inauguration approaches, depending on what the candidates, begin talking about, depending on, who sort of has the ear of each candidate, I think it could get worse for business, and that might be a time to start becoming much more conservative.
So maybe you will buy bonds at some point in your career here.
It could be, or much more cash, much more dividend paying stocks.
Okay, we'll cross that bridge when we come to it.
Yeah, exactly.
So I've kind of written down to, one or two things for each candidate. I mean, I think that Trump will be good for oil and defense. I think that Biden will be good for the solar and EV industries. He'll probably be a negative for the drug industry and some of the financials. I think that the one thing that still kind of sits out there that we know exists, but we don't know how big of an impact it is these third-party candidates. And now we've got two or three more with the Green Party and Libertarian Party putting out candidates, and they're not Kennedy, and Kennedy's continues to get on the ballot in various states. And I'm starting to think that what we thought was a strange topic 6 months ago is becoming, stranger and stranger still. So I have this, I'm an idealist, as you probably can guess, Clem, and ideally I had this vision that the courts were going to prevent Trump from running, that Biden was going to take a medical, reason to step down and focus more on his family, and that there was going to be two new candidates that would be elected at their conventions, and those two candidates would have what I'll call a reasonable election, which would be focused on issues and ideas and abilities. And we would still have chaos, I think, because I think that it's so close in the Senate, it's so close in the House, that whoever gets elected still has to depend on getting majorities for it to truly. So in my mind, most of the time when we look at elections that are close, we say, well, if it's a close election, it's good for the stock market, no matter who wins, because neither one has a mandate. And I would say that the one thing we can probably say about this election is whoever wins doesn't have a mandate. And if they don't have a mandate, they probably don't have a groundswell of support one way or the other for control of both the Senate and the House. And therefore, I hate to say this, but I think that the election and it being over with could be good for the market, because it will put this behind us and let all of this discussion about Hunter and all this discussion about Trump's, Stormy Daniels, and just really to start to talk again like adults about real issues in the economy and earnings. I mean, is that too far-fetched a scenario for you, Clem, to actually occur? Am I out of, am I gone past the reasonableness associated with a skeptic?
So, I mean, what you're saying is that after the elections are over, things might settle down. Is that what you're suggesting?
Yeah, because there's nobody who's going to have a clear mandate. So therefore, the federal government ability to do anything that's going to impact business is going to be very little, because either the House or the Senate will continue to be controlled by Republicans. And even if the president is winning again with Biden, he's going to have less power and he's going to be a lame duck. And therefore, it's going to not be as big an event as everybody has made it out to. Because I think that people are talking life or death. I want to move to Canada if one of these people wins, right?
Mm-hmm.
And I'm not sure I would take all my money out of the market, because I think we have great companies, and those great companies figure out how to operate.
So,
Biden or whether it's Trump.
So if putting it that way, I'm not letting it change my overall, investment strategy of investing in companies and staying mostly invested and so on. So I don't see any reason to change that. And, I will let, if I ever do, I'll let everybody know either through this podcast or through posting on LinkedIn. But, right now it's sort of, I'm staying where I am in terms of being invested in the stock market. I don't see any reason to change that right now. That could change. If things
it can always change. I'm just saying that I think that this messy middle might be how we kind of go along to a new. I mean, in 28, we're going to have something new, right? I think, unless we decide to give term limits or something, something crazy happens. But I think that overall, there is still a possibility in terms of these candidates might not make it to November, which I still hold out hope for, because I think that being replaced by anyone in their party would probably make it a more normal election and would start to move our politics back towards a more reasonable level.
Well, I do agree with you, but I just don't see it.
Okay. So this is the point where we say, is there something that we're not thinking about or doing that we should be thinking about for our portfolios as we wrap up, what we see for the second half of 24? What do you see as something that maybe isn't on the headlines and very out there that could be something you need to think about in terms of the second half, Glenn?
Well, I'd like to think that I've thought about everything. And
Thanks.
and I have thought about a number of these things, but I think that I think one thing to potentially worry about is yet another region of the world presenting a conflict for us. For example, Mexico, something a little closer to our borders. Mexico, Central America, larger migration flows, which could cause, political upheaval. You've already seen this with changes in Europe. We talked about the European elections a couple of podcasts ago and about how there was a shift from the left to the right. You could have more you could have more right-wing leadership in various countries, which, could create a right-wing tilt, in many, many different countries. So I think that's something to watch out for. May not be second half of 2024, but I think it should be a concern that we should keep in mind, sort of the whole relationship between migration and right-wing political shifts. I think is a significant issue. After all, if you look back at 2016, that was an influence in both the U.S. election and in Brexit, this issue of migration, and
Yep.
it really hasn't gone away at all.
We've been putting Band-Aids on it, and I don't think we've really. And I think it's bothersome in many of this, in many of these economies.
Now, I will give you another. Here's an off the wall scenario that I don't think a lot of people are thinking about.
I like off the wall.
Okay, and that would be the collapse of Russia.
Wow.
And I see when you look at Russia, you saw, just a few days ago, you saw a terrorist attack in the Russian Republic of Dagestan. You saw an earlier attack in the suburbs of Moscow at a shopping center.
Yep.
That was a few months ago. You saw what happened with the potential mutiny last year. When you look at all those things, you think, well, just how stable is Russia itself? And if Russia collapses internally, there could be a lot of chaos. Like who's gonna end up in control of the nuclear weapons? Think about that.
Who's in control of the oil? But
who's going to be in control of the oil? Are we looking at 5, 6, 7, 8, 9, 10 new countries emerging from Russia? Sort of a breakup of are we going to see Tatarstan, Bashkortostan? Are we going to Dagestan, Chechnya? Are we going to see all those become new countries? Are we going to see a new sort of terrorist state coming out of Chechnya? Who knows, right? I mean, there would be a lot of chaos if Putin fell.
No, I agree. I think that's a great thing to put out there because I think it's something that people aren't thinking about. And how would you take advantage of it?
Yeah, you're not going to see Putin. You're not going to see Putin fall, and there's going to be a Democratic election tomorrow. That's just not going to happen.
No, I don't think so, but I do think it would represent opportunity in the oil space because if there was a, more reasonable party kind of controlling the influence in the use of oil, obviously, I think it would be great for the oil as a piece of the economy in terms of stabilizing it. I mean, I think the Russia has destabilized oil to a degree to make it always run in a pretty wide range, whereas instead of 65 to 95, if we ran in the 70 to 75 range, I think a lot of people would feel much more comfortable about their industry, results and earnings. So I think it's an interesting way to think about it. I mean, my one would be the banks. That recently we had this Fed recommendation that the 6 large banks need to come up with better plans for how they would wind down their positions in derivatives. And they basically all had the same problem where they were making assumptions about how they would unwind derivatives in a time of chaos. And the Fed said, no, that's not really a reasonable plan. And so the fact that derivatives could cause this kind of event if something were to happen is, in my mind, I don't know how we establish our portfolio protection or an offsetting item that would help us if there was chaos in the banking sector. Because I think that, on the Democratic side, I think there's, Warren is still calling for them to become utilities, which I think they've not quite become, but they're moving in that direction. And then I think we've got other people who would look at more independence in the banking and, the strong survive and the weak. I mean, I can't see the Fed letting anybody fail. I see them, what they did in 2008 and what they've done in the past. I think Silicon Valley was such a surprise to them, which I think is ridiculous because their own people said, we have problems here, Houston, and they just ignored it. So I can't ignore what the Fed did with their recent survey and the fact that they recommended all 6 of these banks come up with better plans. So I don't see anybody talking about it, and everybody seems to be, we know that higher rates are making it harder, and we know that there's going to be some easing coming, especially if there's a Biden administration, and we want to make that administration successful if they win. I don't know what will happen if Trump wins, and I think there's a reason to think about banks and a reason to think about Russia. I think those are both 2 good ideas that are kind of off the mainstream, but still out there in terms of having an impact on the second half. Anything else you want to say, Clem?
Nope, I think that's it. I think we've covered a lot of territory in this episode, Steve.
Yeah. Okay. Well, I hope everybody has a great 4th of July. We appreciate all the support. Our last video with Dan Solon has done very well, and we'd recommend you listen to it in terms of how to help the next generation find financial well-being. And I think that as we get halfway through 24, we've been doing this now for about 7 or 8 months, and we are close to, 40 videos, 40 podcasts, and it's it's been a great ride. We really enjoyed it. And so I hope everybody rests over the 4th and gets ready for what will be a very interesting second half. Thank you very much, and look forward to another episode of Skeptics Guide to Investing.
The views shared on this podcast represent the personal investment views of the hosts. They are for educational purposes and not meant to be taken as investment advice. Listeners should consult their own investment, legal, and tax advisors. Past performance of any investments is not a guarantee for future return.